Starting with the gold prices, which have seen a second-rate state session struggling into the markets. 1300 below is how it's trading right now. More than 0.5% of a decline coming into the prices. It's the Fed meeting that the markets are awaiting right now, and also the physical buying from China and India seems slightly slow, and that seems to be weighing onto the prices. The energy space in the meanwhile also has been under pressure. You have the pressure ahead of the US inventories from the markets there, and apart from that, the Libyan exports also may restart into the market. But the prices on your screens are really reacting to the Russian impact, so 0.5% up on Brent at this point. Let's get on board then. Vijay Bambani, who's author and CEO, BSPL India. Also joining us is N. Prasad, who's CEO, Safe Trade Advisors. Vijay, you go first, and what's your sense really coming in for the markets right now? Because while there's a decline in precious metals, which really are not reacting even to the Russia problems there, the energy space on the other side has seen some strength.
Manisha, crude is just about 0.1% up, whereas natural gas is down 0.25%. My guess is the top of 6,325 levels on WTI crude on MCX is acting as a very stiff barrier, and unless that is taken out very forcefully, the bulls are likely to struggle with crude oil. I don't think the 6,100 level is a Maginot line which will not get violated. There are signs of weakness on the energy complex. Not only the energy complex, industrial metals, all industrial commodities are showing signs of unwinding. There is no sign of optimism on the screen. The prices, the volumes, the open interest, and the difference between the average traded price and the last traded price tells you that the bulls are very wary of writing out a check and taking long positions. And if they are taking long positions, they are not really rolling their long positions in large numbers to the next trading session. These are not really very gung-ho times for buying into the commodity space.
Mr. Prasad, what is your sense, especially for the precious metal space, where the gold and silver both are under pressure? How would you want to trade them today now?
Gold and silver have long back taken a bearish phase, and they are in a spectacular bearish run rather than the bullish run. So just there was a temporary dead cat bounce, and that Russian problem was hanging around, but still at higher levels we cannot find any buyers. Nobody is willing to write a check, as my fellow colleague has said here, that it's seeing unwinding, and I expect gold prices to crash further after tomorrow's Fed meeting, and there is no fresh fund allocation or some buying is witnessed at higher levels. And also the rupee weakening was a very temporary phase for about last 7 or 8 days. I feel going forward we see some more strengthening there. That should push up the prices down in India, and I expect downward spirals in the coming days.
Mr. Prasad, also what is your sense now coming in for the base metals, because the latest report from China suggests that the financing or funding of the raw materials is going to be curbed now?
I feel base metals are also on a very weak wicket. They fell very badly from 450. The copper fell from 450 to somewhere around 392. Just it's consolidating 4 or 5 or 6 weeks and making a dead cat bounce before getting into next mode of selling. I expect it to go to 365 in the coming contract, and it will be sold brutally once tomorrow's Fed meeting happens and all those things, events are ahead. I don't see any big demand creeping in, or there is no visibility of a very sound buying over there. Also the rupee factor, I feel the strengthening rupee may create hesitation among Indian buyers also to make any long positions, because there is a bias towards strengthening of the rupee. So I expect very huge fall in the base metals in the coming days. So even then 418.20 were very good levels to sell around and sit with patience, and you can get very energetic prices somewhere around 360, 370 in the copper level.
Vijay, what is your sense? You have been pointing out technically that of the pressure in case of the base metal space, and last 24 hours really have seen a sell-off coming into this area.
Manisha, like I mentioned, there is absolutely no buying enthusiasm, and buying is limited to very short-lived spurts, which basically lead you to believe that it's more of short covering at lower levels, which is lifting values higher. Every time there is a rally, it's stopping short of overcoming a previous swing high, and the subsequent low is either testing or breaching the previous low. So there is a lower tops and lower bottoms formation in place, which makes me believe that all addition in open interest is actually shorts getting built into at higher levels, and the bears are slowly but surely tightening their grip on industrial metals. Now, aluminium is unlikely or unable to overcome the 112 mark. Copper is unable to go over the 428 levels. Nickel is unable to go over the 1135 levels. And as and when prices approach these levels, I would basically start initiating shorts myself.
The energy space is another one that has actually beaten the whole sector and gained a bit, 0.5% up on Brent and NYMEX both. And there have been some steady moves coming in for the Indian market as well. What's your sense, Mr. Prasad, on the whole energy pack?
As far as the chart and technical and patterns are concerned, crude has made the double top portion and it is likely to be sold. Even I am bearish on crude oil. After today's inventory or tomorrow, this week, I think we should see lower than the previous week's close or previous week's low, because this is being the second week. Last week the selling candle was so big. I think it will continue for this week also. And international also, $98 will be tested soon. And I expect after $98, it's likely to break. We may see $93, $94 going forward, because with this much risk premium and this much the positive news, it's unable to move up. That's very, very, very shocking news, that despite the Russian problem and other things, the Libyan supply is overshadowing it, and we have seen previous week there was a heavy build-up in inventories and the consumption is coming down. So I feel crude oil prices also in India should reach 6,000 mark very soon.
Vijay, what is your sense? How much of a downslide are you expecting in crude?
Manisha, my initial target would be 6065 to 6080. Although I'm not very confident that this support will hold. It might get breached sooner or later, but this is the initial target I'm looking for. Once this level is attained, I would want to wait and see how the price, open interest and volumes correlate. If at all open interest starts to build up as the price declines, I would get a little more aggressive on the short side.
The Stanford scientists have warned of significant changes in the patterns of extreme wet and dry events during monsoon that are increasing the risk of drought and flood in central India. According to the research, the intensity of extremely wet spells and the number of extremely dry spells during the monsoon season have both been increasing in recent decades. The team compared the rainfall data gathered by the Indian Meteorological Department and other sources over a 60-period period. The analysis focused on central India, which is the core of the monsoon region and has extremely high population densities. The data shows that although the average total rainfall during the monsoon season has declined, the variability of rainfall during the peak monsoon months has increased. The monsoon is responsible for 85% of India's annual precipitation and is vital for the country's agriculture sector, and any changes in the weather pattern during critical crop growth stages can reduce yields or lead to crop failure, which will impact India's agriculture-dependent economy. We have seen very alarming also reports coming in from the IMD, the World Meteorological Organization and SkyMet as well in the recent days. Vijay, this just goes on to tell us that the concerns really seem to be building now from other parts of the world.
Absolutely, Manisha. You are seeing water-stressed crop supply side constraints coming in from overseas also. And add to the domestic factor of the Food Security Act, which will mean we have to provide for higher amount of food grains, pulses and ancillary foods like fruits and vegetables, which would mean that food price inflation is likely to be stickier than what was anticipated earlier. It's something that I've always been maintaining, that unfortunately for food inflation, the best investment is actually food, which would mean that if you deploy money in agricultural commodities, the rate of return is likely to be sustainable and robust. And the trader's delight is, of course, the economist's nightmare, because food inflation is not really good for any asset class over a period of time. I would be surprised if sentimentally, even fundamentally, staples like chana, potatoes, grains like wheat, rice, and ancillary products like sugar, etc., don't get bought into at lower levels. So I'm kind of pessimistic on addressing the food inflation front. I think any government is likely to face huge challenges in keeping food prices down.
Vijay, are you surprised, just taking on your point exactly, because even as there are weather concerns, we haven't seen many of these commodities run up. It really has been the guar seeds which have been running because they are directly related to monsoon in that sense. And of course, the edible oil prices are running, but that again is because of the international factors.
Manisha, in any election year, call it a 5-year cycle, there is a concerted effort by the incumbent government to keep food prices under check. Unfortunately, this downward pressure on food prices is automatically taken off after the elections. So talk about it like a compressed spring. Once you compress a spring and let go, it tends to bounce back. And my guess is once you see end of May or June being factoring into the El Nino, etc., food prices might just threaten to bounce back, which can be indeed a shocker.
Vijay, what would your one top trade be then in agro-space?
I would bet on Chana at lower levels because we are likely to see a higher component of pulses into the hunger elimination programs as per international kind of recommendations. So far, the hunger elimination program has focused purely on carbohydrates and starches, with proteins making a very small component, if at all. So you're likely to see a jump up in Chana, and if at all you see prices of sub 3,000, my guess is Chana prices should get bought into. And I'm seeing 3,100 odd levels on the May futures. If I was to get June at sub 3050 levels, I would want to go out and buy Chana.